Welcome to BigONE Weekly News Update. I'm Gavin. Markets were broadly lower last week as rising geopolitical risk and cautious monetary policy weighed on investor sentiment. Bitcoin, BTC, lost 4.34%, dipping below the psychological $100,000 mark to close around $100,160. Ethereum, ETH, dropped 13% to $2,230, while Solana, SOL, fell 13.5%, ending the week at $131. Global volatility driven by Middle East and U.S. market events. Escalating tensions in the Middle East, particularly U.S. military strikes on Iran's nuclear facilities, sparked volatility across global markets. Though the short-term outlook shows signs of stabilization, concerns remain over prolonged conflict and potential asymmetric retaliation by Iran. Meanwhile, the U.S. experienced its quarterly quadruple witching event, adding further stress to equities. In the U.S., the Dow Jones barely moved, gaining 0.02%. while the Nasdaq posted a modest 0.21% rise. In contrast, European markets fell, with the STOXX 600 index losing 1.54%. Oil prices rose 2.67% on geopolitical fears, while gold fell 1.94%. Fed holds rates, hints at delayed cuts. At the latest FOMC meeting, the Federal Reserve kept interest rates unchanged but sent a hawkish signal. Markets now expect a possible rate cut no earlier than September, and only if unemployment begins to rise. The U.S. economy remains in a mixed state, supported by large fiscal deficits on one hand but pressured by high interest rates that are slowing real estate and small business activity. Despite unchanged policy rates, liquidity in both global and domestic markets remains abundant. This reflects a shift in influence from monetary to fiscal policy. Government spending and Treasury cash flows now play a larger role in shaping liquidity than the Fed's actions. Treasury liquidity in focus. Since mid-April's tax season, the U.S. Treasury's cash has been steadily flowing back into markets, boosting domestic liquidity. However, with the debt ceiling issue now resolved, the Treasury is expected to begin replenishing its cash account by issuing more short-term bonds in July. This could tighten short-term dollar liquidity and present a headwind for risk assets. Regulation and the rise of crypto stock integration. In a major regulatory development, the U.S. Senate passed the Lummis-Gillibrand Payment Stablecoin Act, Genius Act, with broad bipartisan support. The bill now heads to the House, where it may either be passed as is or be reconciled with the Stable Act. Additionally, legislation around crypto market structure is advancing, with a Senate hearing scheduled for June 24th. Meanwhile, Circle, CRCL, which went public this month, saw its stock surge 6.7 ticks in just 17 days following the bill's passage. Its rise lifted Coinbase coin back above $300. In parallel, Tron completed a reverse merger, becoming Tron Inc., highlighting the trend of crypto stock integration. This involves wrapping on-chain token value into publicly traded equities, offering new liquidity routes and ETF-like exposure to digital assets. Looking ahead, this Friday marks a key moment for crypto markets, with the largest quarterly BTC and ETH options expirations on Deribit, alongside the settlement of CME futures. Coupled with heightened geopolitical risk and evolving fiscal dynamics, markets are likely to remain volatile in the near term. Join BigONE today and take advantage of the growing cryptocurrency market.